The other element, which was kind of interesting, is I was competing with Robinhood. So my perception of Robinhood was, oh my gosh, these guys have cracked the code on it. Took Schwab, TD Ameritrade, E-Trade, Fidelity 4, 5, 6 decades to get to 10, 20 million customers. It took Robinhood like 4 years.
Welcome back to the Market Hustle podcast. I'm Josh, and today we have an incredible guest joining us, someone who's made it a career goal to make investing accessible to millions of people. Our guest today is Steve Quirk. He is the Chief Brokerage Officer at Robinhood, where he's been leading some of the big new changes you might have seen at Robinhood since January 2022. But of course, like all of our guests, Steve's story goes way deeper than just his current role. We're talking about a guy with over 35 years of brokerage industry experience. So we're really excited to dive into this. I have both Bafi and Fernando with me today as co-host. But let's just dive right into it. Let's go ahead and welcome Steve on the podcast. So Steve, first off, welcome to the Market Hustle podcast. It's great to have you here. How are you doing today?
I'm doing great, and I appreciate it. Thank you for having me. This is I love what you guys do, helping people. And we have half of our 26.5 million customers are brand new to the market. They've never had any experience. So having avenues for them to get educated and do this in what I think is a suitable manner, and so that they have a long and healthy investing career, is amazing. It's great.
Completely agree. And we're honored to have you on the podcast just so we can get some insights, maybe learn more from you based on your vast experience. And a lot of our listeners are Robinhood investors. They actively use the brokerage. Robinhood was one of the first brokerages I used just because it was easy to navigate and learn how things worked through the brokerage. Right. So great to have you on.
Yeah, I think that's one of the things that, like, if you, and by the way, when you say 35 years, I'm like, holy I can't say that word. Holy cow, I'm old. But it also, like, we were talking just before we got on, like, if I just sit back and think about what's changed since I got into the business, man, the playing field has become so leveled for retail customers. It's amazing. Like, the cost structure used to be just so prohibitive. Imagine trying to make money when you're paying $79 a trade. Imagine trying to make money when your technology isn't as a fraction as good as the institutions and the other entities that are trading, or the information that you get is terrible, and there's no education, and all those things have been, I feel like there's always more work to do, but I feel like the playing field has become leveled in such a way that it's really good for retail, and I love that. I think it's amazing.
It's good to hear that from somebody who is a veteran in the industry, who's kind of seen the whole transition over the 35 years with your experience. And that kind of leads me to my question that I want to roll off with, Steve. And that is, so it looks like, based on what I was researching, you joined Robinhood back in 2022 after spending a big chunk at TD Ameritrade. I'm curious, what drew you to joining what was still considered the underdog brokerage at that time?
Well, it's really funny because I started with a company when I got out of the world of trading. I was on a trading floor. So I was in the back of, basically, when people routed trades, I was a market maker on the other side, working for entities and having my own that would take the other side of trades. And a friend of mine started a company called thinkorswim, Tom Sosnoff. And I went to work with him, and we were acquired multiple times, but it was a fast moving company. We were growing like a weed, and we were really innovative, and we got acquired by one firm, then we got acquired by TD Ameritrade, then we got acquired by Schwab. So working in a really fast-paced environment where you can really have an impact and you can feel the impact you're having is cool. But when you get to larger and larger entities, I don't even know what Schwab is, 30, 40,000 people, it's hard to feel like you're having an impact, even if you're contributing and doing cool things. So I think I always kind of wanted to get back to some place where we can move quick and like really see and feel the impact that you're having. The other element, which was kind of interesting, is I was competing with Robinhood. So my perception of Robinhood was, oh my gosh, these guys have cracked the code on it. Took Schwab, TD Ameritrade, E-Trade, Fidelity 4, 5, 6 decades to get to 10, 20 million customers. It took Robinhood like 4 years.
Wow.
And so like, and then to your point, Josh, it's because they removed the friction. They removed all the friction and they said all the things that like fractional trading that prevent people from saying, I just want to put $10 in a week. The old share-based model and how much a transaction costs and everything associated with it prevented people from being able to be successful. And so it was really only, I would have to get to an age of, I'm going back a while, my late 30s before I had enough investable assets to make it worthwhile to get involved in investing. So as a competitor, we all were watching Robinhood and we're like, oh my gosh, like we better get with the times here because the next generation is not coming to Fidelity and Schwab in its current model. So the race for us was, as competitors, to try and basically cater our offering and structure it in such a way so that we can attract the next generation of investors before Robinhood builds out. Because the problem for Robinhood is they're like every new entrant. They only have like a relatively basic offering for new people. They don't have all the things that you need, retirement accounts, et cetera, et cetera.
Mm-hmm.
It was a really cool opportunity to take all the experience and go there and say, here's what we need to do to grow with the current customers, which is the young customers, continue to attract them, but deliver across the whole spectrum, which has been really fun.
I feel like we're still kind of early in history when it comes to a lot of things, right? And when you think about it, 10 years ago or 12, maybe 15, right? Maybe the history there, but things were not app based. Like things were done physically, going to a bank, going to a financial advisor and making you trades through there or trusting another person to do the trades for you. And it seems like Robinhood really came in at the right time where you have this like app-based trading platform at a good price, a good entry level for many people to say, look, if I want to trade, I just go on my phone and do it.
Mm-hmm.
Which it's interesting when you talk about this because it seems like you all started this and then everybody else followed.
Mm-hmm.
So you have like these big institutions, these big banks not doing that yet. They were more focused on other areas and then they have to change their direction to, hey, we're losing some customers over to Robinhood because they have easier access and everything's now 10 years forward. Everything now is done on your phone. You can't really live without your phone. And so it's interesting. It's an interesting point for our audience. I think many people live on their phones and they kind of try to separate it, but having so much access to so much information, would you say that Robinhood is right now more integrating educational aspects to their app?
Yep. So your perspective is spot on, Fernando. Like the timing was perfect because people were migrating to doing more things on their phone, but there's a couple other elements that also contributed to it as well. You also have products that trade around the clock now, which means it's not very practical for me to drag around a laptop all over the place, right? And market moving news, like we have market moving news all the time now. Half the tariff news happens when the market's closed. So you have to have access to get that information. And if you want, act on it or protect your portfolio. So it becomes really important. But truthfully, this trend actually, we had an international entity at TD Ameritrade Schwab in Asia, and we opened an office in 2010 in Singapore. And when we would interact with other brokerage firms and partners over there, they were already done building on anything but the phone. So they were actually kind of they actually were out in front of us with a recognition that everything would be a phone-based app and people would use that. So that I feel like that sort of came from Asia. And so like having having visibility into that and watching how quickly that exploded was super cool, because we could take those learnings and apply them here and realize how quickly this was going to happen. But if you told me 8 years ago that the largest retail broker would be doing like 95% of their trades on a phone, I would have said, no way. Like, I mean, there has to, like, they have to be doing things as on a software-based app or web-based app as a complement. And then, like, if you look at the composition of our trade versus TD Ameritrade, Schwab, or E-Trade, Morgan Stanley, or even Fidelity, like, the composition is very different. Now, we got to a point where we said, we're they either get to a point in their investing where they need a level of sophistication that a phone just can't accommodate. So they need either a complement to that, which is a web-based app, or maybe a primary is the web-based app and the phone is a complement. And those are always going to be your most engaged and loyal customers when they sort of span all of your technology and many of your different account types and asset classes. But to your point, I think that technology shift was pretty timely for Robinhood. Now, the next technology shift, which is happening, is around AI and what that's going to do. Now, most financial services firms have really limited it to what can it help internally with customer support, operational efficiencies, et cetera. I mean, there are some that are starting to dabble in other things, but to me, I think this is going to be a pretty big change because, and we kind of rolled it out in the last Hood Summit. I think you were at the first one, right?
Yeah,
in Miami.
Yeah, I was at the 2024 Hood Summit. We were going to try to go out to this one, but we did see some recaps, and
yeah,
it looked fun.
So one of the things that I think that you saw we're in the process of rolling out is around Cortex. And so, we've in other companies I've been working at, we've had scripting, we've had scanning, we've had the ability to be like do some light algo trading. But the audience of people who can do that is super small, right? Because it's not easy to do. So the ability to deliver on that for pretty much anybody is going to be seismic. It's going to be so cool. And I think it'll help people compete on an even more level playing field with institutions and others now.
That's interesting. See, so I'm curious. So I want to know maybe your perspective on the differences between working at more of the traditional firms and now with Robinhood. To me, what I noticed from the outside is Robinhood doesn't seem to be afraid to try new things or to just pave new paths, right? And I'm guessing that's probably Robinhood's competitive advantage is like they're going to be the first mover. Like they're not afraid to kind of break things, try new things out. If there's maybe some errors in the short term, they're willing to learn from those errors and continue to move forward. Would you say that more of the traditional firms, the reason why that maybe they weren't the first to bring zero trading, or they weren't the first to fully immerse themselves into the trading apps, would you say it's because more of like they're just more risk adverse, or maybe they've gotten too big to where they just don't move too quickly, or maybe they're stuck in their own echo chamber? Like what's been like your perspective, like what you've noticed the differences between the traditional Wall Street brokerage firms to Robinhood, the new guy around the block?
I think there's you touch on a couple of them, but I think it's not just one thing. I think it's a couple things. Number one, when you've been around for a very long period of time, I'll take TD Ameritrade for an example. We were a serial acquirer of firms, meaning we bought Scottrade, we bought Daytech, we bought Waterhouse, we bought a lot of companies. Then we got bought. So now I have to spend a lot of time cobbling together technology, legacy technology. And when I'm doing that, I can't really be out here on the cutting edge developing new things because this requires a lot of resources. So it's not really completely in their control or in our control when I was there. That's a big lift. I would say the second thing is, you kind of touched on it, but when you have a big entity and you have to serve many different, you have RIAs, you have financial advisors, you have all these different people, it becomes, I don't want to say it's probably a bad thing to say, but like, it's easier to look around at everybody else as opposed to looking at your customer. And like, as soon as you lose sight of your customer, like you're going to not do things that are in their best interest. So that's, by the way, that's a hard thing to do, but it's like, even the Hood Summit, which you went to, or with Fernando went to, like, it is, I can't tell you how uplifting it is to go sit in front of 1,000 people and talk about what you're doing and then have conversations with them afterwards. We have a lot of people from our teams come just because I feel like it charges your battery, because look, they're going to be really frank with you. They're going to tell you, oh my gosh, I've done great. This is life-changing for me and my family. I've shared this with other people. I've taught them, but they're also going to tell you where we're falling short. And you need to hear that. And it's really powerful when you do hear it, because you say, we got to deliver on this. We have to deliver on this. We have to deliver on this. And I think that's really helpful. The third thing I would say is you kind of have to be bold. And what I mean by that is, like, you can't just go out there and do research or listen to people. It's important you do those things, but you also have to understand what they're really asking you. And like, I know I don't believe it's really attributed to Henry Ford, but some people say it was he who said it, but he said, if I would have asked my customers, they would have said, give me a faster horse. We'd never have a car. He goes, what they really were asking me is, how can I get to point A to B quicker? And so, like, I think you have to be bold enough to say, hey, I'll give you an example in our space. Customers who are young don't understand the concept of some old person ringing a bell on a trading floor. I came from one, so I can make fun of myself. 2 times a day as the only time that they can transact. They're like, listen, I do 70% of them do their homework and they come up with their education and their investment thesis after the working day. And they're like, why can't I just put my order in and have this executed? If I want to buy stock ABC at $10, I don't really care when it happens. Amazon doesn't close. Why do you close? Don't tell me you need those people on a trading floor. Now, this makes me feel bad. Like, I watched COVID and there was nobody on a trading floor and we functioned pretty well. So they're electronic exchanges. So we took that and said, you know what? We can deliver on that. We can deliver trading around the clock. It's possible. We have to work with market participants. They're going to give you the same, oh my God, I don't know if I can work in operations and blah, blah, blah. And I'm like, yeah, you can. Yeah, you can. Like, you have to sort of imagine what are the customers really telling you and what's the solution and how are we going to get there? And it's not easy. Like, there are things that you have to go to the entire industry and the entire ecosystem sometimes and convince them that there's value in doing it. The skepticism when we launched 24-hour equity trading was rich. Like, go read articles about it and never work. It's not liquid. It's blah, blah, blah. Now all 3 exchanges are going to do it. So that, like, you just have to be bold enough to say, I know what my customers want. I think we know how to do it, and have a team like Vlad and our exec team that's willing to say, yes, let's do it, even if there's a little controversy surrounding it.
Stock of the year for Robinhood. Yeah. Joining S&P 500, kind of marking history here on the podcast, right? Our audience, right? Over 1 million.
I hope they're long it.
Yeah. Our audience, right, doesn't really sometimes get to hear from a company that's doing so well and a CBO there, right? Going back to basics, because there's some certain individuals that are not even, they're trying to get into trading or trying to get into investing, and they're hesitant because, of course, they have the access on their phone. They could do it at their jobs or in between breaks or not. But going back down to like basic, and the market hustle, we're really big on doing foundational work first before going in and doing something more active, or even comparing yourself to many of these influencers that are trading at such a high level and making millions of dollars on social media.
Are they really?
Yeah. I mean, that's what they're showing.
That's a good question right there. That's a good question.
But my question to you would be, what is like a small piece of advice you have for somebody that's starting? Where can they start and how can they start? Yeah. What would be your like advice say
My
stuff.
advice would
Yeah.
be, and by the way, I give this, then I'll even weave in I have 3 daughters that are all in their 20s, and they all are just getting into the working world. And I'm an annoying finance father. So I tell them, listen, your money has to work as hard as you work for your money. That's the way you're going to achieve whatever you want to achieve from a financial standpoint. And by the way, at the time I was at Schwab, and they came up one day and they reluctantly finally said, okay, we're doing this. And it was a Robinhood app. And I'm like, what's up with this? And they're like, we're doing this the same way all our cousins and friends are doing it. And I'm like, okay, cool. I dig that. I don't care how you do it. I just think it's important you do it. So that's my first one. You got to get started early. I feel like it's a good analogy is like exercise and investing. Like the earlier you start, providing you're doing it the right way and suitably, the better. Right. And so to me, starting early, the number of people who I've met who are late 40s or in their 50s and say, oh my gosh, I just got into investing. And if I would have known this when I was 20, I'd be retiring, and et cetera, et cetera. So like, I think there's a strong, there's a strong return by getting in at an early age, even if it's a small amount, because now there's no impediment. Like, you're not paying transaction costs or anything like that. Second thing is, most of the time when you're young, you don't have as many investable assets. So you have to be careful. But like, you just do it in a small basis to learn. The one thing that I think people don't realize is it's kind of like riding a bike. You can read 5 books on riding a bike. I can put a bike up on a stage and you're going to fall over. You have to do it. You have to do it. And the part that I think that people spend a lot of time on, which is important, is figuring out what I want to buy. Is it NVIDIA? Is it Apple? Is it Amazon? And what I tell my own kids and what they do is they invest on a basically they do recurring investing. So on a monthly basis, they say, I'm going to put X amount of dollars in this. And they do it across like 3 broad-based ETFs, and then whatever stocks they like, whatever companies they deal with, whatever they think is hot, they put small amounts in that. And it removes the emotion for them. Because for a while, when they first got into investing, it's hilarious. The market's going up and they're like, Dad, this is amazing. This is great. The market starts going down and they call me. They're like, what the hell did you do to us? And I'm like, let me be clear. I am not the market. I don't have a lever where I decide up and down one day. But I said, if you guys are going to be this emotional about it, then just put these recurring investments in. And I can't use the word guarantee, but I will assure you in 20 years, you will be super happy. Because the time in market is more important than how you time the market, right? We've all heard these analogies. But the other thing I would say, and this one's kind of counterintuitive, because we get a lot of questions on it from people in the media and other things. When the tariff news hit in April and the market really got crashed, and some of the most popular names were down like 30, 40, 50%, our customers dove in big time. And they deposited record deposits. They had record buying of equities and funds, everything. And they were like, oh my gosh, isn't that alarming to you? What if the market kept going down? I'm like, it's not alarming to me. It's actually what I would tell them to do, because they're young.
Are you able to see like what age, or maybe share what age did you see more diving in? And
younger. And that's exactly what they should be doing. Like, you have an investment horizon of 40 years. You know what the returns are going to be. Yeah. If I look back 50 years, okay, let's say it's going to be 10%, right? If I go back to 1950, if I go back more recently, it's almost 20%, right? So am I going to have some periods where it's not going to have those returns? Absolutely. But over time, I should be very aggressive. Now, if I'm a 59-year-old at Schwab, I can't be diving in at that point. I'm very close to having to use that money. So I feel like the counterintuitive thing to say is you should be aggressive when opportunities present themselves. And you're going to be, it's not easy, because if you're a person who hasn't had a lot of experience in the market, and this is the first time you're seeing something like this and the market moves the way it does, even me, who have been in the market a long time, I'm like, whoa, this is a little frightening.
Mm-hmm.
So I would never advocate doing something that makes you feel, as soon as you feel uncomfortable, you're going to make a bad decision investing.
Mm-hmm.
Like if you have an investment that is scaring you or you're having trouble sleeping, it's too big. You should just get out of proportion of it until you're comfortable, because you're going to make a bad decision. But if you're comfortable with it, you should be aggressive.
Steve, I wanna kind of touch on demographics a little bit deeper here. Yeah. I think it kind of loops back into some of the things you just mentioned about starting early, and Josh's question in terms of, obviously with demographics, there's a lot of things to consider, and you listed a few of them. And obviously the type of clients, right? The investor expectations, conservative versus aggressive strategy, age of the investor, time period, the era that we're in, right? I'm pretty sure, like you mentioned, now you can just do everything via phone. Maybe 30 years ago, I don't know what the main, I don't know if you have to actually go on Wall Street on the floor or do the phone calls and have the paper, right?
Exactly.
They have to pay to do those. Tech adoption and platform use, right? You also have income and net worth levels as people transition through chapters of life. Financial literacy and investing goals are changing by the day. The broad culture, behavior shifts in general, also just investing culture, right? Meaning day traders, margins, swing traders, betting, long-term investing. I mean, there are so many buckets.
Yeah.
And it seems like Robinhood has really cracked the code of not just being the one-stop shop, but attracting all the customers and consumers of all demographics and background, right? So now some of us know exactly what we want out of the platform. We know exactly our investment strategy. And so for us, we're like, okay, good. It's easy, right? We're comfortable with it. We've taken emotions out of the game. We've been doing it for quite a long time. But I suspect that there are many people out there that are also somewhat confused on what and how to even really take full advantage of the tools that's available to them, because the reality now is that there's too much information, leading to many people kind of having that analysis paralysis situation. And so how does the team kind of ensures a pretty good balance and clear communication to all the different types of clients without it getting confusing to the point that people end up not taking action? And like you just mentioned, investing early, it's such a life hack. It really does the heavy lifting for it, which is something we preach here quite a bit. So how does your team kind of continue to make sure that as you're developing new tools, resources for customers all over the world, that your communication and clarity in identifying how tools should be utilized within the system and platform? Yeah.
It's a great question, because that's changed since I started in the business. The amount of information and education and the way that it was consumed. We used to talk about long form newsletters or even in-person education events, which we still do some, but a lot of people just want it at their fingertips on demand, or they want it in the pathway. Learning that, like in the pathway, is really important. So when I get to the point where I'm about to do something, there's a tooltip that teaches me, or there's something that I can learn about how to do this in a way that's going to be suitable. So I think adjusting the learning techniques to the audience is super important, because the average age here is early 30s. They don't consume content and education the way that the previous generation does. So you have to adapt to that. But I think there's also another strong element, and it's something that we're working on right now, of validation. And what I mean by validation is, even if I come up with a great investment thesis and I do all kinds of work on it, I'd love to have somebody who kind of thinks like me or has an account like me or something just validate it. Just tell me, am I missing something? Am I way off base here? What's going on? And that's social today. I mean, look, when I started, there used to be investment clubs. You'd go to the YMCA and sit with people and talk about what you're going to invest in. We don't have to do that anymore. Some people do still, but I don't think there are many. And so creating avenues for them to be able to learn from each other is really powerful. What at the Hood Summit, and I've seen this for so many years in doing educational events, particularly in person. The education they get from us and from industry experts is amazing, but they will tell you the education they get from each other is even better. And the connections they make, because they make connections with people and keep in touch and then have these back and forth, which it's a cool thing about the market is it's not a zero-sum game. Like you and I can work together and be successful and have great results. And it's not like I'm going to be competing against you. It's a big enough market where there's so many entities that we can all have success. And so I think that's really important. But to your point, technology is helping us do that too, because the advent of technology allows us to stream and provide information, content, and education in a way that it just wasn't possible in the past. Final thing I'd say is, as you brought it up, you said not only here but across the world. It's actually very different. No matter in different places you go to, we're in the UK, we're in Asia. They want to be educated in a very different manner. Like it depends. You have to understand who you're talking to, and like you have to be careful not to say, hey, this works here for this audience, so I think it's going to work here for this audience, because they might have completely different needs and manners that they want to learn. But at the end of the day, the final thing that I would say, like, I will be so happy if one day we get to the point where everybody is comfortable talking about finances more openly. Generations before us, you don't talk about money with each other. You just don't do that. And I feel like those norms are sort of melting away. It's okay to talk about trading and my account and what I'm doing, and in a way, and I mean, look, it's kind of bad in some ways. We talked about it a little earlier. We got people saying I'm making $10 million a day and all that kind of stuff. But being able to have those conversations with others and not feel uncomfortable about it is useful. It's going to help people.
Yeah, Stephen.
All right, that was a very long answer.
That was a great answer.
But yeah, I mean, it was a long question.
It was a good question, though.
I just want to mention, Steve, like that's exactly why we started the podcast to begin with, is to not only try to share some of the things we're all learning, but also to bring people like yourself onto the podcast to share the wisdom that you've gained over the 35 years of your trading experience. And so, I can't thank you enough for coming on here to share what you're learning.
I like to use this one analogy, which I think is useful, because people, like, a lot of people are like, give me the magic key. I don't want to do this education. I don't want to work. I don't want to have to do, you know what I mean?
What's the shortcut?
Yeah. What's the shortcut? And like the analogy I use for them is there is no shortcut. There are now that being said, like, here's the analogy. When you fly across the country, there's a bunch of planes that flew in front of you, and they know where the turbulence are, and they radio back and they say, hey, fly at this altitude, move to this altitude, move to this altitude to avoid the turbulence. But you can't avoid all turbulence. Like, even with that information, you're going to hit some turbulence. And so that's what I feel like is most useful from people who have experience, is just saying, look, I can't tell you you're going to always be successful, but I can tell you a whole bunch of things that can make you unsuccessful. And hopefully, if you can avoid enough of those, it'll help you on your path. So in other words, it's like a kickstart in terms of getting going on that bicycle, if you will.
Yeah, Steve, so as I think about your response, and it resonated with me well, because I'm in my early 30s, and many of us are either close to it or just right about that spot too. And so when I think about it on a personal level, I might not have as much time to really dive into a ton of research, even if I'm excited about just being around it, right? Long form articles and so forth, given maybe life responsibilities. We have to work. We have aging parents, right? That's something we have to start thinking about. And I'm pretty sure many of our audience can relate to that. And that's another good reason why we should all continue to invest. So currently, I prefer the information at my fingertips, right? With high level summaries of what are the key drivers, what's driving a stock, or just and I think in Robinhood, the digest section for each profile or each quote is perfect.
Oh, that's
so
awesome.
many people out there that may feel like they don't know anything that's happening. They don't understand what's going on. You get a nice quick bullet, like summarize of what is happening with that stock or within the industry right on the spot as things are happening. So That's a huge advantage that I hope Robinhood users and our listeners that do leverage the platform are taking full advantage of it. Because again, we don't have time to watch news for the whole hour, 2 hours. We are to go, right? So if you can get something quick that kind of reaffirms or help you can stay in the game versus, oh, NVIDIA went up 5%. What does that mean, right? Like, what's happening? Maybe they just had an incredible deal with Intel related to that $100 billion investment that they're making. So now you know what's happening without being lost in the sauce, for lack of a better word. Now, I can also see where some might assume that because the information is at their fingertips, then they can get in the state of feeling like they have to do something, right, to try and maximize their gains, or, oh man, this just happened, which means that stock is going to go to the moon. So now I have to buy it quickly or else I'm missing out, or I have to sell it quickly because the news was negative. I am curious, and I want you to kind of speak to this a little bit more, right? If you can speak to your own long-term experience of how being patient and staying in the game long-term with that delayed gratification has improved not just your financial life, but your personal life, career life, and what are some of the intangibles and the psychological benefits, right? Because a lot of times we invest, or many people invest and get so stuck on the financial benefit of it. And a lot of times the why is beyond the money, right? So if you can kind of speak to some of the things that, because you've invested for long term and stayed in the game and delayed gratification and focused on the foundation, right? How has that allowed you to improve your life and other people's life and your family life dramatically?
I think that it's really interesting that you point out, like, the financial component of it is very important. Everybody would agree. I'd rather be successful than unsuccessful. I think there's an emotional element to it too, though. It feels good to do well in the market, and people really like that. And we did a bunch of research on it. Some people, it's more important than even the financial gain that happens. And I think that's part of the reason why you see people posting on social, hey, I'm doing this, this well, and that's great. Celebrate it. But the part that I love, and I'll give you a story, and I can share the story because the person of who I met at the Hood Summit, we introduced him to a Wall Street Journal reporter, and he told the story. It's probably going to be in an article, but it was the night before we were doing our keynote, and I'm wearing a Robinhood shirt, which I usually am, and he saw me and he came up and he started talking to me, and he's a plumber from Florida, and he said, "You guys have really changed my life." And I'm like, "Oh, that's amazing. What? Tell me about it." And he said, I'm a plumber. I don't make a huge amount of money, but I got into investing and I sort of did it. And in the beginning, I probably didn't do as much education and research as I needed to do, so it wasn't wildly successful. But then I recommitted, and now I've done amazingly well. He said I have 3 small kids. I was able to buy a home. I started teaching my friends and other family members about this, and they're having success. And so he showed me his app. He showed me all his trading, and then he's like, "So this is my account with you." And then he pulls up another one and he shows me another company's. And I'm like, "What the hell is this?" And he goes, "Well, you don't have multiple brokerage accounts." And we were launching them the next day. So I said, "Well, yeah, okay, that's cool." And then I watched. There's 1,000 people that came in the audience when Vlad and I were on the stage, and I watched where he sat. And I said, his name was Aaron. And I said, as we were launching multiple brokerage accounts, I said, "Aaron, can you stand up and and talk about your story?" He loved telling his story. He loves telling his story. So I feel like I love those stories because, like, I mean, come on, what else do you want in life? If what we do can help, what you guys are doing can help contribute to that, that's amazing. There's nothing else you're going to do in your life that's going to be so impactful. That's cool.
Wow. Really appreciate you sharing that. And I think it's so easy to get lost in just the surface level stuff, right? I mean, even that story there's the depth of that. The fact that an average individual or somebody who might be listening to this episode and think, well, it's easy for someone else to make it because they are investing $10,000 a month, or they were just born into the money, or it was passed down, right? And so many people at a time where cost of living is high, a lot of challenges across the board, right? Industries are changing. You touched on AI earlier, not long ago, and just how people are kind of feeling about the status of their life, the status of their future and outlook. To kind of hear these relatable stories, these conversations, right? The element of just feeling good because you're heading in the right direction, feeling good because your money's at work. I think people hearing that and seeing that has a huge impact on what they think is possible, right? So they don't get married to the idea that all is lost, that nobody cares, nobody out there cares, right? People might think all the businesses care about is just AI and replacing everybody with AI. And guess what? Steve will probably be the first to tell you, if you're listening, that yes, they probably use a lot of AI tools and technology tools, but those tools have allowed us to enjoy Robinhood as it is today, right? And so we have to kind of continue working at it and taking a broader view, but also understanding that everything is not working against us. And there are a lot of really smart people that have dedicated tens of hours, so many years to creating tools and things that we can benefit from. So I know I'm probably speaking on behalf of myself, but hopefully on behalf of all our listeners that take advantage of the platform. And Steve, the incredible work you and your team and the entire Robinhood group is doing is really, really appreciated. And so if you guys don't hear that enough, you're hearing it from all of us for sure.
That's amazing. And I would say to add on to your point, like, okay, let's assume AI is going to replace XYZ and all these things. And even look, in my generation, people didn't move from one occupation or job as quickly, as often as they do today. If you can have agency over your finances, regardless of where you're working, it's a game changer, right? I'm not married to working at plant XYZ or whatever it is because I've taken time to learn something that's going to make me have the ability to go and do what I want to do. And even the structure of the way that financial services is set up is kind of screwed up. And what I mean by that is I have a 401k over at company XYZ, and I leave and go over to another company. That company like makes it super hard for you to get at that. As a matter of fact, there's a lot of people that we deal with that don't even know where the hell they are. They can't get in. They can't get after them because they make money on keeping them. And so like we try and help people. We have a 401k finder to help them find those things and bring them all and consolidate them and put it in a personal account so you can go to any company you want. You're not tied to anybody. And you can have the ability to invest in whatever you want, not once a quarter in 3 funds. And so I think breaking down those barriers, a lot of them have been broken down already, but there's a lot more that need to be broken down to help people.
So many of our audience uses Robinhood. What should they expect from Robinhood coming up? I know we have social, we have online banking as well, and Cortex is your AI. Is that out today, or is there more expected?
There's more. Yeah, Cortex will be it'll be a continuation of capabilities, like the scanning and the scripting and all those things are going to continue to get better and better and better. And then there'll be other elements that'll continually be added there. And even the digest that you were talking about, and the ability to just kind of understand what's going on in the market. By the way, that's a source of frustration for somebody who's been in business as long as I have. Like I'll see the market move and I'm like, what is going on? And I go to all the usual sources, X, everywhere else. I'm like, I don't see anything. What's happening? And so being able to just go to Cortex and say, what is happening with the overall market? What's happening with this stock? And it quickly finds the sources and gives you some context on exactly what's happening is going to be really useful. This happened to us. We have about 100 people in our office in Chicago. A lot of them are they've been around a while. They've come from trading floors and financial services firms. And during that whole tariff back and forth thing, I don't know if you remember that day where all of a sudden the market went up like 5% because there was rumored to be some news that were happening. And I run out of the office I was in a meeting, and I'm like asking everybody on the desk, what's going on? What's going on? What's going on? And they're all giving me like 5 different answers. Oh, there's a surprise rate cut, or he's pulling back the tariffs, or it's this, it's that. That's kind of scary. You know what I mean?
Yeah, no. And to your point, Steve, I think with how much information's out there, it's easy to get lost in just how many, not only how much information, but just like the different opinions, right?
Mm-hmm.
Like, I think one thing about markets, what I've learned, I have not been in the markets nearly as long as you, Steve.
Yeah.
For about 11 years, one thing I've realized is people are going to have different opinions. And sometimes you got to make your own opinion of how to
you do.
How to determine what to think, what to make out of that information, right?
Mm-hmm.
And I think it's also why we try to tie everything back to the fundamentals. It's why if you have that long-term mindset going into the investing game, it's easier to not let some of the short-term movements or confusion kind of impact you. And my personal philosophy is like, I'm not against being an active investor. Like I do have like my own side portfolio on Robinhood.
Yeah.
I think it's a lot easier to make those side investments or those side active investments when you have a long-term foundation in place.
Exactly.
That way you don't get too emotionally reactive to the news. If your entire mortgage payment or rent payments invested in short-term plays, and then something like this tariff curveball gets thrown at you, you're going to be in a much vulnerable position compared to somebody who has built their foundation, has the emergency. I know it's boring to talk about, but has the emergency fund.
No,
but then, ironically, you'll actually be a better active investor. You're not going to be vulnerable, or you're not going to be desperate to have to make magic occur to like get some result. Like you can actually take a step back, take a breath, and then make strategic plays from there, from a strong foundation, compared to just jumping in the game and hoping some magical investment takes off and makes you rich overnight.
What we see is exactly what you're describing. Usually what happens is people have, and it doesn't matter the size of your account, they kind of have a core portfolio. Like I was describing it like my daughters do. Here's my core portfolio. And then look, I like what's happening in the news. I like watching this. I like doing this. That's a small portion of your portfolio. That's kind of like your fun money, right? I'm going to invest in this. It's this. I think this is going to happen and that's going to happen. But that's a small portion of your portfolio. That's the money that you're willing to take more risk with than your core, your base portfolio. To your point, once you have had time with a core portfolio, you actually start to understand what the returns on that are going to be. So then it's easier for you to budget and say, you know what, I'm not going to be stretched on rent or whatever payment I need to make, because over time, this is what I've gotten out of this part of the portfolio. Part where you're kind of going back and forth, it's going to be way less predictable.
I actually, when I went to the last Hood Summit, I went as an active trader, right? And then you mentioned it because there was an episode we did on my story where I said something around what you said, where it's play money or fun money that you can use. But interesting thing about that is that sometimes when you play around too much, you find out that you end up maybe you can end up at a very high level. End up with a bunch of money. And what happens then, right? You have to go back to your fundamentals and your discipline. Yeah. So there's like two sides to it, right? If you don't have discipline and know when to, hey, I have to chop up this money and put this in a more conservative place or somewhere else. Because if you keep playing and it's like betting at some point where you get too into it, too addicted to it, and then you can potentially lose if you're not disciplined. So it's funny that point that you made about fun money, a lot of people probably have that, and they're going to listen to this and say, yeah, but I want to remind them that they have to be disciplined at some point and look at their returns and say, okay, I want to keep this amount of money, I have to split.
Yeah. I think the discipline is such an important point because it's easy to create an investing plan and say, hey, I'm going to invest in these 5 stocks or whatever ETFs. And if they go up X amount of dollars, I'm going to roll a little bit off and look for other opportunities, etc. Or if it goes down X percent when I'm not comfortable, I'm probably going to get out of this percent. I encourage everybody to have that plan before they start investing. What happens to people is when they get in the moment, the plan changes. This time it's going to be different. I'm going to hold on this time. It's not as bad. Or this is up 40%. I think it's going up 60% this time. You're going to pick the wrong time. But
that's greed. That's the greed.
If you're
the emotions,
if you're really regimented in discipline, You're going to say, you know what? The stock went up 40% and now it's up 60%. That's okay. Because the next time, it's going to go up 41%. And then I'm going to be, you know what I mean? Like that discipline is so important.
Yeah, especially in bull markets, right? Like right now where greed can start to run a little out of hand. You never know how long bull markets or, the runs are going to last.
Yeah.
I think it's important just to kind of, as a quick check-in, anybody listening in, check yourself, right? Make sure you're not making the crazy justifications to
don't
make
be
stupid decisions.
Don't be chasing. Don't be chasing.
Don't be chasing.
Yeah.
But Steve, we're running up on that hour, and I just want to thank you again for taking the time out of your busy day. I know you have a lot of projects you're working on at Robinhood with how fast you guys are shipping things. So the fact that you're able to dedicate an hour for us means a lot. Is there anything you'd like to leave our audience, especially maybe around resources or maybe like a line of wisdom for them, just to finalize the wrap up of this episode?
I would say there are all kinds of learning resources on Robinhood, but I would encourage people, because I think you guys made the point. At the end of the day, it's your money. Mm-hmm. You're going to hear a lot of opinions about what would be a wise thing to invest in. I'll break it down to a single investment. But I always believe that just taking bits and pieces from people that you think are going to be helpful to you and creating your own plan, not somebody else's plan, is going to be super important for you to be successful. Because at the end of the day, you're the one living with it. So,
yeah,
I greatly appreciate you guys having me. Thank you so much.
Yeah, of course, Steve. Hey, the honor's ours. I really appreciate everything you've done. Not only for you, for context for the community. Steve, you were actually the one that introduced us to Robinhood.
Yeah.
Eventually got Vlad on the podcast. So and thank you for that intro.
It was in the elevator.
Yeah.
For Dad.
Yeah, I told that story one time. And I was telling the team here, like, it's a full circle moment right now.
Yeah.
Because I did meet you in the elevator and then everything kind of went from there. And it's also kind of riding the wave. I told Josh the other day where Robinhood, probably $30 a stock, $40 a stock at that time. And you guys have grown massively. And we've been able to witness growth over time and having you, Steph, and Vlad on the podcast. So definitely good stuff, and keep at it.
Thank you. Thanks.
Yeah, Steve, where can our audience follow you? Just for a quick wrap up.
Oh, I'm on Twitter, or do we don't call it Twitter anymore? X. I'm on X and LinkedIn.
We'll leave your social media handles in the description. So Market Hustle community, go give Steve a follow. I've seen him.
Thank you.
Add a little bit of some good insights. So go check him out.
Yeah. And
thanks for listening. Again, thanks, Steve, for coming on. And everybody, we'll see you back in the next episode. Keep stacking those assets and have a great rest of your day. Bye-bye.
Thank you.